Good morning, ladies and gentlemen. Welcome to the special edition in Business Today Television, where we track quarterly earnings for the quarter gone by, which is June to September. The first of the block, as far as earnings are concerned, is India's fastest growing wealth management firm, Anand Rathi Wealth, and we are honored to have Mr. Feroze Azeez, Deputy CEO at Anand Rathi Wealth, and Mr. Chethan Shenoy, Director at Anand Rathi Wealth, with us to discuss this very strong quarterly as well as annual growth in numbers. Namaste Feroze ji. Firstly, festive greetings for everybody at Anand Rathi Wealth, and what a fantastic performance the company has turned up with, 32-33% rise in both quarterly profit and net sales. Tell us, what are the underlying momentums that Anand Rathi Wealth is experiencing in its business?
Good morning, and it's such an honor to be with you. When it comes to, of course, this quarter which has gone by has been good. The half year which has gone by has been good with your wishes and God's kindness. But if you look at how we want to build this business from a shareholder standpoint, there are two aspirations which we have for our shareholder, which is consistency and market agnosticism. Are the two aspirations we have. We pray to the Lord and we put in a lot of effort to get this. So why am I calling it consistency? Is last 10 quarters, our mean growth on a year-on-year basis, declared quarterly, has been 33.6. The median has been 34. And the standard deviation of this result has just been 4.5. So the lesser the standard deviation of our result, the more a shareholder's predictability of the quarterly result and fewer surprises. That's one aspiration. I think your viewers should know. Will we meet the aspiration or not is a separate story. Only God will decide and our efforts. Second is that we want to create a business which is market agnostic. Most people have this firm belief that financial services business are going to be completely sentiment driven, which is what we want to change that hypothesis. If you look at the last 12 quarters, the worst market quarter was Q1 FY23, where Nifty fell 9.6%. In that quarter, year-on-year growth was 33%. So हमें वो सांत्वना होती है कि भाई जब सेंटिमेंट खराब था तब भी हमारी ग्रोथ ठीक थी. So we of course these 32, 33 are exceptions because we are on a smaller base. 200 करोड़ की पैट पे 30% ग्रो करना और 1000 करोड़ की पैट पे 30 करोड़ ग्रो करने में बड़ा फर्क होता है. So we believe that 20 to 25% growth is what is possible over 10, 15, 20 years on a consistent basis.
Okay, we'll drill this a little later, but a lot of this has to be because of the relative under-penetration of wealth management business in India, and of course the fact that now everybody wants to make more than a decent buck compared with fixed deposits. Therefore, companies such as Anand Rathi Wealth are showing such wonderful expansion, not only year on year but quarter on quarter as well. Just the right time to listen to what Chethan has to say. Mr. Shenoy, you are the product head at Anand Rathi Wealth. Tell us, what are your clients expecting from you, especially the Ultra HNI set, and what are the new innovations that Anand Rathi Wealth has done compared to what the business was 1 year ago?
First of all, I would like to give festive greetings to you and your audience here. So as far as the our UHNI audience is concerned, ultra high net worth audience, we have over the last 6 months categorized them as platinum. That's something that we launched about 6-7 months back because we realized we need to strengthen our preposition as far as the platinum is concerned. The preposition is not substantially different. The levels of delivery of the service, the strengthening of delivery of service has been improved substantially. The quality of people who are interacting with these clients is something that we are trying to ensure that the standards are maintained. So these are things that we have worked on as far as platinum is concerned, and we are also targeting an extra return of 1%. That extra return of 1% is coming at not substantially higher risk. Risk has always been a very important factor for us. So we are wanting to make sure that for every unit of risk that is being taken, the bang for the buck is 1 unit or more. So we look at something called as a Sharpe ratio. So we have introduced a 1% higher return to the ultra high net worth individuals over the last 6 months' time through bringing in some sort of innovations within the modeling. And our approach is very strategic rather than product oriented. So the mathematical modeling has been tweaked to improve our returns that we deliver to platinum customers. So that's what we've done as far as the platinum customers are concerned. And for the normal high net worth individuals, who are our main audience that we've been working on over the last few years, we've introduced a lot of new tools for them to be able to look at their performance of their portfolios outside of Anand Rathi. Because we are only managing, remember, a certain percentage of the money, but Nagar Saab. There is a lot of money that is lying outside for these clients in physical assets and financial assets outside. We've introduced new tools for them to be able to look at how their performance would have been if they were with us vis-a-vis what it is doing outside. And those tools, proprietary, and have been very, very helpful for us to bring in net mobilization. I'm very thankful that we've been able to see some good results on net mobilization, and we have been able to also revise our AUM numbers for the year thanks to that.
Okay, Chetan, the next question also comes to you. In terms of physical expansion of branches and the outreach that Anand Rathi enjoyed at the end of second quarter, what has been the increment over the year ago period and the quarter ago period, which is the 3-month and the 1-year expansion?
Yeah, we've added about 3 to 4 new branches, largely in category B towns. We've also expanded within our existing old branches. In this first half of the year, we've added a lot of category B town branches, which has been our ambition because we feel there is a lot of opportunity in the category B towns. A lot of our relationship managers, if you see the vintage of our relationship manager, 175 of our relationship managers have been with us for more than 5 years. So a lot of these people are very happy going back to the hometowns that they came from. I come from a small hometown, a small town as well. We are very happy going back to our towns and introducing professional management of wealth to these towns, and that's been something that we have been working on. We have a lot more in pipeline, but we've introduced 3 to 4 in this quarter, and we've started off with branches and a few set of RMs there. But also the existing branches we've expanded. We just had an inauguration of a big office in Noida. So there's expansion happening among the existing branches as well, but category B towns is where our focus is.
राइट आप दोनों नोएडा आए और एक कप चाय नहीं पी मेरे साथ, चलिए कोई बात नहीं, अब मैं मुंबई में आके पीऊंगा. अजीज साहब से जुड़ते हैं. फिरोज जी, व्हेन यू ब्रेक डाउन दिस growth, 32-33% growth in both top line and bottom line, what are the drivers which are resulting in this very sharp increase in profitability and top line?
Shelly, देखिए अगर if you look at 32%, like I said, it's an exception. For the initial few years, we can grow at that rate. Our long-term guidance, 20-25%, is broken down into 4 mutually exclusive cylinders of growth. One is a God's gift and Chethan Shenoy and his team's good performance for the client. Now, when the client makes 12% a year, 13% a year, that becomes the implied growth in this business. If I do good for my client, my growth of 12-13% is taken care of. Now, if you look at my top 297 clients over the last 10 years, have made 14.9% compounded on the overall portfolio. Top 297 clients who have finished 10 years, the mean return is 14.9. That implies that if somebody gave me 10 crores, he's got 40 without adding a rupee. So that's called the implied growth. If you do justice to people's money, like Sharpe ratios have to be greater than 1. If that is possible, that's your first leg of growth. The second leg of growth, Shailji, is that जो हमारे current RMs हैं, 374, have only 30 clients currently, but they can manage 50 as per our study. So the 20 into 350 or 374 is another 7,000 clients can be added without new plant and machinery. That's called capacity utilization. The third thing is penetration. Like Chethan also mentioned, there might be 80,000, 1 lakh crores, which is there with the 10,900 families outside in physical and financial assets with competitors. So that will come to us. That's the penetration leg. And the fourth leg of mutually exclusive leg of growth is we have 400 plus apprentices who are being trained to be future RMs. And 157 of our RMs were promoted internally, taken from colleges, trained for 2, 3 years, 4 years, given them the same morals, values of Anand Rathi brand, and then send them to the market. That's the fourth leg of growth. That is new plant and machinery. So these are the 4 legs of growth, and that's where we're confident that we will be able to grow 20-25% for long periods of time.
Okay, let's look at the AUM part of the business where the expansion is higher, which is 57% growth in AUM to about 75,000 crore rupees. Feroze, would there be a guidance that you are sharing with your shareholders as to where this AUM can be targeted at? This is of course both growth in new clients as well as growth in price, which is of course market appreciation.
शैल जी, आप see जो ऊपर वाला हर क्वार्टर में कितनी एक्सटर्नल रिटर्न देता है, that's not in our hand. So what was our target? I'll tell you internally, Shailji, because you speak your heart out, I'm speaking my heart out. What is our internal target? Is 1,000 crores new money from clients cutting a check per month has been our internal aspiration, which was significantly lower 3-4 years back. पूरे साल में हम 500 करोड़ कलेक्ट करते थे. आज हमारी ये चाह है कि we collect 1,000 crores per month. Did that happen? The answer is no. We collected 5,700, which is lesser than 1,000 crores. Okay, don't hold me to it, but that's the internal target. Point one. And so coming back to your pointed question, guidance kya doge for this year? We have given a 80,000 crore guidance as the total AUM. So 72 was our guidance. We are already at 75. So it doesn't make sense to have the 72 as the guidance because we've crossed that mark with God's grace and some effort. And so 80,000 becomes our new guidance. But when we count at Anand Rathi Wealth, most important thing to note for a viewer or a shareholder is that we count it very, very microscopic. There are assets which are there, for example, tax-free bonds. If they're lying in our demat account, we don't count that as assets. Because 15 साल वो client ने कुछ करना है नहीं, तो उसको मैं, why should I, इस भ्रम में मैं क्यों जीऊं कि पैसा मैं मैनेज कर रहा हूं?
फेयर पॉइंट. ये बताइए फिरोज जी, ये जो 1,000 करोड़ का आपने एक अपने लिए बुलजाई का टारगेट लगाया है, हाउ इज इट ज्योग्राफिकली स्प्रेड? द रीजन व्हाई आई आस्क इज you mentioned that your RMs are now happier going back home. Are you therefore seeing better demand coming in from tier 3, tier 4 cities? What is the average ticket size of this client who is new to the market but is relatively wealthier off when you see an average Mumbaite?
Shail sir, if you look at the breakup, I'll just tell you where is the total AUM lying currently, 75,000 crores. Our professional guru, the CEO, is based out of Bangalore, Mr. Rakesh Rawal. So that's a very large unit. Mumbai, by the design of it being a financial hub, is a large unit. Delhi and Pune. Pune is something which matches our DNA. So we have a very large presence in Pune with almost 9,000 crores in Pune, which might not marry with the geographical spread of other competitors. That's because हमारा जो DNA है professionals को manage करने का, that's more abundantly available in Pune than in Mumbai. Mumbai you find a lot of promoters, but mathematics is better accepted in our judgment in professionals. And that's where Pune has become a very large unit for us. So these are the 4 units which are in the chronological order of size. Then coming to where will our geographical spread expand? We have this, we don't go top down in this, कि हमें 50 शहरों में रहना है. We look at कहाँ हमारे पास, where do we have somebody who is a confidant, who has learned Anand Rathi ways to go there. So we, like Lucknow, we found somebody who can manage that. That's why Lucknow has started. We've started Jabalpur because there was somebody's wife got transferred there and we had that same person, Mr. Pandey, for 10 years. So that's when we start. So coming back to the point of how many tier 2, tier 3 cities, tier 4 cities we'll have, maybe in my estimate 20 to 30 in the next 3 years, looking at where our people come from.
Okay, that's a very interesting thought that instead of going through the demographic balance or maybe concentration of wealth, you are actually looking at people who have an understanding of a micro market and then maybe targeting ultra HNIs, HNI in that space. I think that's a very sensible way forward. Feroze ji, it would be criminal on my part not to get your response on how markets have shaped up over the last 1 week or so, 10 days or so, with this very sharp correction that we have seen. How do you see equities at this point of time? We've had this Goldilocks scenario till September 30th, when the Nifty alone was up somewhere like 22%. What talk about the small cap and mid caps? Fabulous money people have made. But what now?
Yes, Shailji, if I break this down into three parts, one is short term, medium term, and long term. In our belief, short term is dependent on demand and supply, and that we have a barometer, which is FII's long and short positions. When they cross 80% on either sides, the market takes a reversal. This has gone right 11 times out of 11 times in the last 2.5 years. This is one of the most interesting under-tracked bit. On 27th September last year, this year, which is about 10 odd days before, the FII long positions crossed 81% long, 81.6 to be precise, which happened after 6 months, and Nifty was at 26,200. We have believed we are still testing the data, but I'm trying to create curiosity amongst your viewers to track this underutilized data. Moving averages, ADX, all these are very popular short-term triggers, but their probabilities of predictive capability is at best 57, 58, and that is also statistically checked. तो FI लॉन्ग शॉर्ट पोजीशंस 80 के ऊपर जाती है, लॉन्ग जाती है तो नीचे जाने की संभावना है मार्केट की, शॉर्ट होती है तो ऊपर जाने की संभावना है. On 4th June it was minus short 88. On that day I went on television saying markets cannot go below 21,000 on the counting day at 11 in the morning. On the basis of this parameter, that's on the, as of now it is 36.5 as of yesterday, which is one of the sharpest unwindings I have seen once I've started, from 81 on 27th to its 36 today, as of yesterday. So that's on the short term. Medium term, corporate earnings have disappointed marginally because of the higher base. We still believe that Nifty earnings will be 1165 for this year. If that 1165 were to happen, markets risk on the medium term vaporizes, because 1049 was the earnings last year, 1165 is our estimate. And if this were to be a tick mark, markets can't have steep corrections. Third, which is macros, out of 7 variables which we track, for the last few years, 6 of them are deep green. One macro variable is a little red. So 6 on 7 on the long term is, I think, medium and long term look good, and short term also from these levels look good, looking at the long and short data of 36% on long side.
If I may ask, which is the red macro in your dashboard which is showing signs of warning lights?
So the flatness of the yield curve is what worries me. The flatness of the yield curve, by which I mean, I have not seen from 2004 when I started. Yesterday, the 10-year paper was at 6.89. The 3-month paper was at 6.56. People are believing that interest rates will come down and real estate sector or several sectors will get a benefit. The long end of the yield curve has never gone up. So if RBI reduces the short end of the yield curve, it is unlikely that the long end of the yield curve will come down. So this flatness of the yield curve is a negative, in my opinion, and that has not been priced in.
Okay, Feroze ji, the research that your team does in unearthing fabulous funds which remain sort of hidden for various reasons from the general public is phenomenal. Now, in the past 2-3 months or in the last maybe 15 days or so, what have you unearthed in the mutual fund industry in terms of specific schemes which might outperform in the next 6 months to 2 years?
Yeah, Shail, like you said, on the mutual fund side, we track one thing very, very closely, because that's what you alluded to in terms of the broader market rally. And the risk is not on Nifty. To my mind, the broader market rally getting unwound is the risk which most retail investors on a stock level or a mutual fund investor at a broader market level carry. So we track the small cap inflow on a daily basis. And you'll be surprised, for the last 15 days, in spite of this turmoil, every single day the market there has been an inflow in the small cap space of at least at an average of 117 crores. And day before yesterday was also a positive day. So once this liquidity dries up in small cap, the valuations could come back to reality. Till that time, they will rally. Now coming to the themes which you asked for, I personally think energy as a theme is underplayed in India. And that's one short 2-3 year structural change which you can play. And there are some energy funds which have got launched at the right time by some sensible AMCs. The second theme, of course, I have to give a disclaimer that we are a part of that theme, which is the capital market story. AMCs, custodians, and you have these rating agencies, all capital market businesses put into one index, which is what NSE created a few months back or a month back. That's one thing which I am reasonably bullish in this whole financialization, because India has only 6.7% of its total household savings, 826 lakh crores में से सिर्फ 6.7% equity में है.
Right. Feroze ji, as usual, minutes passed as seconds and hours pass as minutes when you and I start conversing. But like I said, we have to always look at the clock because both of us are bound by it. But it's always a pleasure. He's wishing you all the best in the coming quarters, and of course both of us will be meeting shortly in Mumbai, and of course you need to give us a list of 4 or 5 funds for a better show on how to create long-term wealth. Thank you so much for your time and the best of luck.
Thank you, sir.